Time to have a look at the markets picture. Asian markets mostly higher as investors digested news from the private Chinese survey looking at the manufacturing sector. That figure for May came in at 52, a little higher than expected. Remember, yesterday we had the official PMI numbers coming in at 51.0, little weaker than expected. However, markets in that territory looking higher. Shanghai Composite and the Shenzhen component both up in positive territory, 0.25% higher. The Nikkei bucking the trend on that particular side, down about 0.1%. When we look at European markets, also moving higher as investors digest a slew of economic data. There's also this positive sentiment that's moving around the Eurozone when it comes to the prospects of economic recovery. When we look at U.S. futures, also looking higher in pre-market trading, indicating that Wall Street could get off to a nice start a little bit later on when U.S. markets start trading. But to look at what was happening on the South African side, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. So, let's look at the JSE performance right now. Before we get to our unemployment figures, what do you make of the current activity?
JSE doing exceptionally well, over 2% up, and I think it's in line with what is happening with global markets. I think it's more of what you can easily call, Nastasia, a PMI data. We started this morning with a good number coming out of China. Also, we had a number coming out of Germany, beating expectation. Also, the numbers, the PMI numbers that came out of the Eurozone. So the UK as well, the factory activity is doing so well, and markets also expecting that the ones that will get later from the US, the PMI numbers, will also be looking okay. So it's more a question of that. But more importantly, we need to bear in mind that we are in a market, what you can call that is liquidity driven. As a result, equity markets, when they get a bit of bad news, they're able to ignore that because there's just so much liquidity into the market. And as for inflation, as much as we have seen the number that came out of the Eurozone, that is almost the highest in 2 years. But markets, they believe the story so far, I think, that central banks won't move, won't be made or forced by the current inflation numbers to start working on their loose monetary policy, and are prepared to have a bit of a room. So, yeah, it's more a question of markets are believing that all this cheap money will still be available in the markets, and we are seeing most of economies trying to get back to normal.
About an hour or so ago, we had the unemployment figures, come out. Does it lay bare the vicious cycle in terms of economic activity? On the one side, that's been exacerbated by the load shedding that is kicking off. Yet at the same time, there is this lack of enthusiasm when it comes to investment.
Definitely, it does have an impact, but truth be told, it's a much better number compared to what we expected. And all those things considered, that we don't have the necessary investments, electricity continues to be issue, COVID is another issue as well, structural reform that needs to be implemented continues to be an issue. But hey, markets were expecting a worse number compared to that. And if you look at that, the likes of your finance managed to create the most jobs, and unfortunately construction, they're the ones who lost most of the jobs. But you are right, we've got structural challenges that needs to be addressed for us to be able to make a positive dent when it comes to this high unemployment number.
What did you make of Famous Brands' results? Because from my perspective, it just looks like they had a tough year.
I guess it was expected. Given that where they're operating, we know, most of the staff were closed. These are the guys who run their franchises. We know the takeaways were affected. And also in the UK, it was also more the same impact. So, the profit margins were down, the headline earnings were down, revenue was down. But we hope going forward, the guys have adopted to the new way of doing things. And with the expectation that we'll have a successful rollout when it comes to vaccines, then economy should start opening up, and hopefully people start getting jobs, then people can start starting to support them going forward. But as it is, I think all those numbers were baked into their asset price.
Are there any company results locally that you are looking forward to?
We looked at Delta. We know it's a company that has been suspended from trading since December because of the two forensic investigations. And as a result, they had a change when it comes to management and the board. But hey, these are the guys who've got like your retail, your industrial, your office. But the good thing with them is that their office is more exposed to government as a landlord and the likes of SARS. And hence, the guys could still be able to collect some rent. And going forward, they want to make sure that they become the preferred landlord when it comes to government. And yes, it was expected that if you look at their basic and diluted headline loss managed to get worse. I mean, it worsened by almost 162%, revenue down almost 5.5%, and it doesn't come as a surprise that the guys decided not to declare any dividend.
All right, Makwe, thank you so much for your time. Let's leave it there. That is Makwe Masilela from Makwe Fund Managers. Lots to discuss tomorrow with our market watcher that we're going to have on the show. Of course, one of the things we're going to be looking forward to is what happens when central banks start, loosening that monetary tightening that we did see. What will the impact be for the rand in particular? So those are some of the discussions we'll look forward to for the rest of the week.